two of Greece's most iconic destinations, both of which are part of the same Cyclades archipelago, are moving in completely opposite directions. And the question isn't just what's happening, it's why. And today on Lighthouse Quick Takes, we are looking at one of the more striking pricing stories in European hospitality, which is the divergence in performance between Santorini and Mykonos in the Greek Isles. We're going to look at year-over-year numbers for May through July. And for May and June, we will of course be comparing actualized 2025 numbers to actualized 2026. And as we're recording this at the start of July, the July 2026 data represents advertised pricing. So for July, we will be comparing actualized 2025 hotel pricing to 2026 advertised. Now, as you can see here, Santorini hotel pricing is surging year over year, plus 35% in May, plus 31% in June, and advertised pricing in July is up 16% relative to where 2025 July actualized. Mykonos, on the other hand, is flat to negative across the same months, negative 3% in May, negative 8% in June, and advertised prices are down 9% in July relative to actualized prices from July 2025. That is a massive swing in performance between these two Greek islands. Now, here's where it gets even more interesting. Flip to the short-term rental market, where we'll look at gross ADR, and we actually see both islands growing, with Mykonos growth actually exceeding that of Santorini in each May and June. Mykonos short-term rental gross ADR is up 30% in May, compared to 22% for Santorini, and 19% in June, compared to 17% for Santorini. July shows Santorini gross ADR exceeding that of Mykonos, but obviously we are in July now. But as of this recording, what you are seeing represents the gross ADR of whatever is currently on the books. And it does show positive year-over-year growth relative to what we saw for hotels, which showed year-over-year decline. So, we see Mykonos hotel pricing on the decline, while at the same time, its short-term rental market is surging. That's not what you'd expect if overall travel demand to the market was simply weak. To me, this looks more like a shift in demand. Travelers choosing Mykonos appear to be increasingly leaning towards booking short-term rentals over traditional hotels. And this is putting downward pressure on hotel rates while short-term rental operators capture the demand at a premium. In May 2026, Mykonos short-term rental gross ADR hit €611 per night, more than double the actualized hotel price of €276. And the gap between the two accommodation types appears to be widening. Santorini, on the other hand, shows the reverse dynamic. Hotel prices are climbing so fast that the relationship between hotels and short-term rentals has completely inverted. In May 2025, Santorini short-term rental gross ADR commanded a slim €17 per night premium over actualized hotel pricing. And by May of 2026, that dynamic had flipped entirely. Actualized hotel price exceeded short-term rental gross ADR by around €37 per night. So, the bottom line from this tale of two islands: when you see hotel pricing diverge this sharply between similar destinations, check the short-term rental data. It often reveals the competitive dynamics underneath. In Mykonos, hotels are competing against a short-term rental market with gross ADRs more than twice their actualized hotel pricing, and it seems to keep growing. In Santorini, however, it is the hotel segment that appears to have the pricing power. Two islands, same sea, very different competitive dynamics. Thanks as always for tuning into the Spotlight podcast from Lighthouse. It's always a pleasure to spend a few minutes of the day with you. My name is Blake Reiter, and we'll be back next week, as always, with another Lighthouse Quick Take.